Hello, everybody. Welcome to Retired by Investing. This is RC again, coming in with another comprehensive market review. It's been a lot of crazy things going on in the market, and I really want to deep dive this. I know for most traders, this is one of the hardest periods to trade through, and there's like a lot of selective stocks to be in versus just the general market. And I would say just try not to get frustrated. It's very hard for most even seven-figure, eight-figure traders. They're having a hard time. So you're not the only person out there that's struggling right now. So even for myself, it's been super hard to get traction. So I just wanted to put that out there. I only have like two positions open right now, and uh, can't really be buying breakouts as much as possible. Even though some of them do work, but majority of the time it's just like very selective. It's not really a very profitable type of strategy right now in this market. So majority of pullbacks have been working. But anyways, going into it, the SPY is now below the 50. And again, this doesn't paint the whole picture for everything right now. For everybody that's wondering, the Magnificent Seven is pretty much it's not looking too great. And I'll go into that on a different video if you're subscribed. But right now, a lot of that is dragging down the SPY. And when you look at the SPY just in general, of course, you're going to see this, right? But under the hood, again, there is the RSP, which is at all-time highs, means that the SPY literally is at all-time highs. There's really nothing wrong. It's above all moving averages besides, actually, yeah, it's all above all moving averages right now, right? So there's really nothing wrong. If you're in the right stocks, you're in the right sectors, and you're in you should be doing good. But that doesn't paint the picture for majority of the people. And what I've been talking about for like weeks now is that when you look at the Qs or the Nasdaq, it's really not. It painted this picture of like a double top for this time right here, right? And I think that's something that most people need to understand is that like when tech is going down, this is not the time to be in tech, not the time to be in growth stocks. And at the same time, we're below moving averages. Like, look at this. This is just horrible. This is not good. If we don't bounce coming Tuesday, whew, it's gonna be a rough time for tech. So I just want to let you know that. But this does not paint the full picture. The whole picture is actually this one where we are in a actual bear market in tech, which I've said even last week. And it's just again, we need to see some relief here. A lot of it has been with IGV, which is a total disconnect here because at the same time, as the market was going lower, this is actually kind of has had some relative strength. So, is there going to be some type of bounce from here? I don't know, but you can see just on the bottom here, right? So much volume. Like I don't even know how many people like loaded up on this. Well, I even loaded up on this, but no, not financial advice. But anyways, just want to let you guys know that there's a lot of volume coming in here, so there is some support at this area. But again, this is a longer term account for me, so FYI. But going into the IWM, still looking good. Nothing wrong here. Just going sideways, not a problem. MDY, pretty much near all time highs. Again, going sideways or up and to the right, and nothing wrong with that. Majority of the stocks that I'm buying right now are in this sector, and so, or not sector, but in this index. And so, just as a FYI, this is kind of like where you want to be in. You want to be in mid caps. They're kind of killing it right now for a lot of the stocks in terms of trading. But just if you do not have an edge or anything like that, just stay in cash. Don't be trading if that's the case. If you're a longer term investor, I mean, you're in it for the longer term. Just make sure you manage your risk, and you should be fine. But just as a FYI, the VIX is a very, very scary picture. This is what's happening, right? This is what's happening here, right? So you finally get this picture. We could I don't know if we flush. I don't know at this point, right? It's just super crazy. I would expect that we kind of go down from here a little bit. But if they keep stabilizing, I just don't know what to say. We've been having a lot of days where the VIX has just gone straight up from this area, right? From 13 from the time of January all the way up. So I don't know. I hope that we get below eventually get below like 17, right? Or even 16, even 15. That would be amazing, right? Because historically, like even during like 2024, we were in like the 12s and then it boosts back up and then it goes back down to like the 13s. So yeah, that's basically what's happening in the market. Just be careful this week again. Um, if we do break the 675 level, then that is like then we're going to be making a lower low and can test lower, and that's one area that you don't want. And then basically at that point, it kind of gives the thesis that we'll probably go lower at this point. So just as a FYI, those are the things that need to happen. Either the SPY reclaims, right? Bounces here, reclaims, and then eventually breaks out. Or if we just stay in this range, I mean, we're eventually going to break down. So take care, guys. That's all I have for you guys. Peace.